Hello, good day, welcome back to my channel. Today, we're diving into Singapore REITs and navigating Singapore REITs in the storms of war, inflation and interest rates. Let's go! Recap. On August 13th, I done a video on the Singapore REITs. I mentioned that higher interest rate has an impact on the borrowing cost. With federal interest rate higher and longer, there is no strong factor to buy REITs. REITs often use debt to finance property acquisitions. When interest rates rise, the cost of servicing debt increases. This can lead to lower profits for REITs, as a larger portion of their income goes towards paying interest. Investors may shift their money from REITs, leading to a decrease in demand for REITs shares. On September 7th, I mentioned that I will start to look at specific REITs where I am projecting the interest rate to plateaus in second half 2024. With the Israel and Hamas war, this has changed. In summary, war and higher interest rate create a turbulent economic environment, potentially harming REITs investments. Next, let's look into global forces at play which affecting the Singapore REITs. I have listed 8 of them. You can see a red cross at most of them. This means that we are facing more negative impacts on REITs and the share price of REITs will be suppressed. Changes in global interest rates can impact the cost of financing for Singapore REITs. When global interest rates rise, it can lead to higher borrowing costs for these trusts, potentially reducing their profitability and affecting their share prices. The overall health of the global economy can influence investor sentiment and demand for income-producing assets like REITs. During periods of global economic uncertainty, investors may hold back their investment. Singapore REITs often have overseas assets and investments. Changes in global currency exchange rates can impact the value of these assets and, in turn, affect the performance of Singaporean REITs. If it more so when the overseas assets are earning lesser due to a stronger Singapore dollar. Real estate markets in other countries can impact the performance of Singapore REITs with international exposure. For example, changes in property values or rental markets in the United States, Europe, or other key markets can affect the income generated by these assets. Geopolitical events such as trade tensions, conflicts, or political instability in other parts of the world can lead to broader market volatility, which can influence investor decisions regarding Singapore REITs. Global inflation trends can indirectly impact REITs in Singapore. If inflation rises significantly on a global scale, it could affect interest rates and rental income, potentially influencing REITs' performance, especially if your assets are affected by business closing down or working from home arrangement. Global capital flows and investor sentiment can play a role in the performance of Singapore REITs. Investors seeking higher yields or safety may allocate their capital differently in response to global economic conditions. Finally, during periods of global economic uncertainty or financial crises, investors may flock to safe haven assets such as Singapore saving bonds. These negative factors reduce the demand for REITs, and due to adverse economy's condition, investors may also sell off their REITs position. Next, let's look into the S-REITs Leader Index ETF. Based on the price action, I won't be buying any REITs for the next 1 month. I will probably monitor the index and pend for sudden exodus of investors to decide. My buy decision probably is around 72 cents in views of the uncertainty in market. Finally, thank you so much for tuning in to today's video. Your support means the world to me. If you enjoyed what you saw, don't forget to hit that subscribe button and ring the notification bell, so you will have my next updates during this turbulence time. Until next time, take care and invest with care.